sectoral pack, the gainers and losers from the Nifty 50 basket, followed by our view on both Nifty and the banking index and some of these stocks which should be on your radar for the next week for buying or shorting depending upon the market scenario. But before that, disclaimer. So this webinar is meant for educational purpose. It's not a trading or a investment recommendations. So before taking any decision based on the information shared, please check with your financial advisor. So now talking about the performance for the week. So as you can see on the screen, both Nifty and Sensex ended marginally lower, 0.5% kind of a cut, largely due to this decline on today's session that Nifty slipped over 1%, and similar trend was witnessed in Sensex as well. So otherwise, it was an okay week for the benchmark, but this Friday decline has derailed the momentum that we were seeing in the market. Coming to the sectoral performance, as you can see, it's equally distributed. So for gainers, energy, media, pharma, and banking. Losing side, realty, IT, auto, FMCG, and metal. So it was a mixed trend wherein we saw energy counters largely dictating the trend on the positive side. And similar trend, if you see the top 5 gainers from the Nifty 50 basket, top 2 names from the energy basket, NTPC and BPCL. Then we had Asian Paints. If you remember that in the previous webinars, we talked about Asian Paints trying to bottom out, after spending nearly 7-8 months in a very tight range related to the lower band. Followed by Divis Lab and Power Grid, again like 3 counters in fact from the energy basket and rest 2 from the other spaces. On the losing side, we have 2 names from the auto pack, a sharp cut in the auto majors post auto sales numbers. So Eicher and M&M, and alongside with that 2 names from the IT pack also, LTIM and Wipro, and lastly Grasim also was there in that list as. So overall, a mixed week, a week of consolidation, because last week was positive. In fact, for this week also, for most part of the week, we were either trading sideways, positive, but on Friday the tone changed. So now what we are anticipating when it comes to the index, so this is a daily graph of Nifty. So if you remember, if you go back and see that 25,100, that was the area basically we were referring to in the previous webinar being the immediate resistance. And we made a high around 25,078 in Thursday session, and then this decline is what we are seeing in the market right now. So after this a new milestone or a resistance test of 25,100 mark, again we have ended on Friday, plus the clues that we have from the US markets. So by the way, there's no clear trend when it comes to the US markets. They are trading extremely volatile. So apart from earnings, we are taking clues from the US markets also, so which is not sharing any decisive trend. But still, the way we have ended on Friday, it indicates that this profit taking may extend further, and this yellow line, which we have tested earlier also, this 20 EMA, Nifty can retest in the coming sessions. The possibility of again some consolidation, in the index after testing 25,100 seems much higher. So where we have the support, so 24, 550, 500 is the zone basically we have the next support. If it breaks, then 24,200 is going to be the next major area of support. So around this, closer to the low of this candle. Upside, 25,100 will continue to act as a strong hurdle in case if we see any recovery. And once we break that mark, then 25,400. So as of now, for the initial session, indications are in the favor of some consolidation within the possibility of testing 24,500, 550, in the coming days. So accordingly, one has to plan positions when for the index. Now let's talk about banking. So banking, like we've discussed earlier, also it's not participating. So another factor basically which is capping the momentum in the market, uh, apart from this mixed global clues, is banking. So private banking majors like Axis, ICICI, they are continuously, trading in the pressure. HDFC is trying to, cap that damage after forming a strong base around 1600 mark. We are seeing gradual recovery, HDFC, but at the same time, Axis, ICICI, they are still reeling under pressure. So Axis, in fact, after the sharp cut post numbers, is still struggling to witness any recovery. So this indicates that if the top three, four names, fails to see any sign of rebound and recovery, so banking index is also likely to remain sideways with a bias on negative side. So unlike Nifty, which is trading above its 20 EMA, here as you can see this yellow line in the banking index, which comes around 52 400. So that's the area basically which continues to act as a strong hurdle for the Nifty, bank Nifty. And once we break that mark, then 52 800. So we have multiple resistances to cross, and it was anyways underperforming the market. And in case if the scenario deteriorates, we might see further pressure. It was not banking, you know, it was not the culprit. It was IT largely, that the IT counters were under pressure alongside with, uh, of course, select banking names also, but largely it was IT. So banking was anyways underperforming. Now with IT also under pressure, that's the reason why we were saying that a possibility of retest of 20 EMA seems uh, more likely in the coming days, alongside with the negative global clues. So in banking also, the view remains the same, that for a time being now, until we see some sign of recovery reversal, one should refrain from aggressive longs. We are seeing certain stocks participating every now and then. So stock like Federal Bank, wherein we have consistency in the trend. Then we have SDFC Bank, wherein we are seeing strength after this recent consolidation. Uh, Other than that, selective stocks, was earning announcement or something, they continue to see some recovery or rebound. But the rest of the pack, majority of the pack, is something that one should refrain uh, until we see a sign of reversal, at least in the index. Now, where to focus if everything looks sideways to negative, especially for the index? There's a one stock from the sugar basket, which is named Balrampur Chini. So the stock was also trading in a very broader range for quite some time now. It's been almost what, nearly 2.5 years now, that it's been trading in a sideways trend. But the good part is that unlike the other sugar counters, which see sharp corrections during the corrective phase, it didn't decline much during this corrective phase, and finally in this week we could manage to cross this trend line hurdle uh, with decent volumes on the weekly chart. So this indicates that once the market stabilizes, then there's a possibility that we can see this move strengthening further, with recovery in the other agri-related counters. So Balrampur Chini is one name which one can look at for the next week. Next stock from the basket, which is showing mixed trend, the NBFC basket. So M&M Finance. So M&M Finance is also as you can see, it's a broader range that we were seeing this stock, trading for almost 1.5 years now. And finally, we are seeing an attempt of breakout here. And it's a weekly graph. So after this, tight range consolidation and this breakout attempt and decent close on the weekly graph, despite pressure on Friday. So this indicates a possibility of further up move or strength. So it might remains range bound, but it's not likely to underperform the market, is what the indications are. So if somebody is looking for something to accumulate, they may consider M&M, provided if the time horizon is at least for a month or two. So this is another stock which we like based on the recent price action. Lastly on the list, Pyramid Enterprise. So here also, a prolonged phase of correction, corrective tone, and then finally we are seeing first sign of reversal with sustenance above the multiple moving averages support, and then a breakout above the trend line as well. So both factors with volumes means the up move with volumes indicates that yes, the reversal which we were eyeing is finally there, and we expect this recovery to strengthen further in the coming sessions. So when we are seeing that Nifty is likely to face pressure in the coming week, the main key, because the trend has not reversed. So first of all, we have to understand that a dip or a profit taking is not a trend reversal. The trend reversal means when the bias shifts from positive to negative. It's just a normal correction that we are seeing. When we can mention that the trend has reversed for the very short term also, once we close below 24,500, the 20 EMA, and sustain, then we can say yes, the trend has reversed for a shorter duration and the bias is likely to remain negative. So until we are not seeing that, one can continue to look for opportunity to accumulate quality stocks. All right, so just to sum it up, Nifty, our view is clear that based on the recent close, we expect further pressure. 24,500, 24,200 is something that Nifty can test. If it breaks 24,500, upside 25,100 will continue to act as a strong hurdle. And if it manages to surpass the same, then 25,400. Banking, on the other hand, was still like, maintaining the muted bias. We are not seeing any sign of, reversal. In fact, the fresh dip in ICICI and Axis indicating further consolidation. So amid this scenario, the best approach is to focus on stock-specific trading opportunities and stocks which are less volatile, low beta counters from across the path. So based on that, Balrampur Chini, M&M Finance, and PEL is something that looks strong on charts. So this is all from the presentation part. We'll just take a feedback, quickly a feedback. Then we can start with the Q&A session. So if you have any questions related to the webinar, related to the stock and sectors that we have discussed, definitely you can share. And so please quickly fill this feedback and then you can start using this Q&A tab to ask your questions. Okay, so almost done. So let's start with the Q&A now. So again, I would request and remind that this webinar is for the educational purpose. So individual stock specific queries is going to completely derail the format. Uh, we would rather prepare ourselves for the next week, having a broader view, how the markets are going to perform. So instead of any particular stocks, because it might not interest the other participant, we can talk about particular sectors, and accordingly, if we feel that if there is any name which one can look in that sector, definitely we can talk about. So accordingly, the first question that we have from Rakesh is on education sector, short-term view. So Rakesh, we have very limited stocks, when it comes to this pack. But what I can recall based on the recent, move and the related news, Navneet Education and uh, another name, NIT Limited. These are the two stocks from that space uh, which are performing well. So, but again, one needs to understand that we have not seen any strong or sustained up move in the stocks related to this sector in the past also. So be very strict with your stop losses if you are trading with a shorter duration. Okay, Mr. Sampa, can you please rephrase your query, because there's some issue, I guess, with the spelling. So, is it pharma or private bank? Please specify. Okay, so next question from Mr. Rahul on gold. So, though we usually talk about equity markets in this webinar, but gold, because I understand, because majority of people have interest, especially after this recent dip that we are seeing in the gold prices, post this budget. And despite that, the international gold is still holding strong. So though we are seeing some recovery in the domestic markets also, but broadly we feel that gold may continue to trade in a range. So if the view is short term, then we feel that closer to around this 71 to 52, 72,000 range is something that might cap the upside in gold. While the downside also seems capped, so close to around 68, 800 to 500 is the area basically where we have multiple supports. So broadly 68, 500 to 72,000 something that might hover at least in the near future. Okay, next. Okay, so another question on metal stocks, so metal sector. So, see, there's a question from Lakshmi Lalji that our view on steel and silver. So, silver is something that we can definitely talk about. Steel is something that uh, uh, if you talk about from the stocks point of view, then entire metal space is again witnessing correction. Uh, and that is what we have recommended in our previous webinars also, that for a time being now, let's not get aggressive with the metal counters. The simple reason is that the real demand, the actual demand comes from China, and until we see sign of decisiveness in Chinese market, we may continue to see volatile swings in the metal counters, and that is what we are seeing right now. But similar to what we are seeing in gold, silver is also like following the identical pattern, but comparatively the quantum of recovery is less, because the way it declined from 94,000 to 80,000, we have marginally rebounded to 84,000 right now. But in case if it manages to surpass this hurdle of 24, 84, 500, then this recovery can strengthen further and we can inch toward 87, 500 to 88,000 also. So as of now, it's also looks, a sign of recovery is something that we are seeing in silver as well. Okay. Okay. So next question on pharma space. So let me just check how we have closed on the weekly basis. So yeah, it's a decent close. In fact, the index is trading at the record highs. Uh, 1% up. And so largely, yes, apart from, see, the two sectors which are going to, rather one, which is going to impact the overall tone of the market next week is banking. Why I'm saying this is that the other majors like energy, IT, uh, auto, they have done their part. They have performed really well, and they have started seeing some correction now. Banking uh, has been on the sidelines for last 2 3 weeks. So if Nifty has to recover, the focus should be more on banking. That if banking covers, then definitely there's a possibility that we can see recovery in Nifty also. Otherwise, possibility of further correction below, like 24,500 level also seems higher. But amid this negativity, there's still certain sectors and pockets which are holding strong. So like pharma. So within pharma, like Sun Pharma, Lipin, Oro Pharma, Granules. Granules we have been discussing on this webinar since ages, and finally we are seeing the momentum which we were eyeing earlier. So other than that, Devis, Dr. Reddy's, they are also like trading strong. So we feel in case the market corrects and we the banking continues to underperform, then definitely pharma, and let's see whether FMCG also supports this theory or not. So FMCG is in fact looks slightly wobbly in comparison to pharma. So we may see some profit taking in the FMCG pack. It's largely because that if ITC sees correction, so the bias changes automatically. So ITC, we are seeing a bit of profit taking and consolidation. But otherwise, also, we are seeing certain stocks from the pharma, this FMCG basket dealing in the pressure. So for a time being now, one sector which looks slightly immune to this decline is pharma, not FMCG. Okay. Mr. Rajesh Lal on defense sector. So that's we have been discussing from last almost 4 5 webinars, and the view remains the same that uh, after this phenomenal surge, it's obvious that until we see the alignment between the price rise and earnings, the stocks usually correct, and that is what we are seeing now. They were extremely overbought, and now we are seeing consolidation of profit taking, on every rise. So for a time being now, again, I would say if the view is very short term, one should avoid. We may continue to see some bounce every now and then, but sustained up move like we were seeing it earlier, it seems unlikely, at least for a time being now. So if we see any change in the stance, we'll update you in the upcoming webinars. But as of now, the view remains the same. Okay, so Mr. Abhijit has this question which might interest you all, that sector specific SIP. So means thematic funds. So of late we have started seeing this you know new breed of thematic funds. Earlier it was restricted to the key sectors like banking, auto, IT, uh, you know, uh, yeah, largely these alongside with gold. But of late, we have started seeing like defense fund, then new age companies, EV fund, things like that. So whenever we are investing into one particular theme, through SIP mode, So I'm assuming that at least your time horizon is 3 to 5 years. So if it is less than that, you are taking a big risk, because what if the sector underperforms? So I'm giving you an example that if somebody have invested into IT, uh, related index fund or ETF, for almost 2 3 years there was hardly any return. In fact, there were negative returns. But in the recent recovery, in just, 2 3 months, we have seen that we are at par to what you know uh, we have lost in the index. So especially if we are betting on any particular sector, any particular theme, so there's a possibility that it may remain sideways or consolidate if the sector has seen a decent up move. Just to give you an example of defense also, that we have had several funds from the defense space. So those who have invested for very short term, and especially after this rally, they might be sitting on marginal losses or almost flat. But 4 year, 5 year down the line, definitely yes, there's a possibility that they'll end up making decent returns. So thematic funds are difficult if you are not very uh, clear about your time horizon. So if somebody is looking for SIP opportunities to start with, then index funds are better. Means Nifty, Sensex, and mid cap funds and things like that. Okay, so next from Mr. Manpreet on IT sector. So though he had mentioned few names on the mid cap IT basket also, but we'll refrain from answering that. What we'll talk about is the IT pack overall. So as of now, in fact, since the beginning of the earnings season, we have been discussing that the IT majors looks comparatively better, and the mid cap IT names are slightly uh, they were slightly in the back foot, from the beginning itself. And now we have started seeing some correction also post numbers. For example, Birlasoft was among the uh, you know top losing stock during the week. So for a IT, in case if somebody is looking for investment after this strong surge, we may get the opportunity to accumulate the top names, in 4 5% kind of more cut from the current levels. But again, I would recommend is to sticking with the IT majors instead of the mid cap IT names. Earlier, we were discussing about Birlasoft some time back, but after this decline, I feel that for a time being now, it's prudent that one should avoid Birlasoft and other mid cap IT names also. Okay, so beverage sector. So we have very limited stocks. When it comes to this particular space, and United Spirits is anyways doing well. Then we have Redico, Som Distillery, and Tilak Nagar. So it's a kind of a mixed bag as of now that we are seeing in this space. And I feel from the consistency point of view, United Spirits looks comparatively better. Others may continue to witness volatile swings, especially if the view is short term, considering what we are seeing in the market right now. Okay. Next, we have oil marketing companies from Mr. Arvind Sharma. So, after this strong move, it's a normal, healthy correction that we are seeing in the OMC space. I feel that it's a good opportunity if somebody is looking for accumulation again, because the trend is likely to remain positive, is what the indications are from the short term point of view. Because post numbers also, we have not seen any major dent in the stock prices, and the risk of earning is behind us. But yes, since the markets are slightly volatile and we are seeing pressure, accumulate them gradually, not to go at one go, buy at one go. Accumulate them gradually. All right. So there is no sector, protein sector, Mr. Sampa. Okay. So hope it answers your query. So lastly, we have covered all the sectors. Yes, auto we have missed. So auto, post the auto sales number means uh, it's largely today. Basically, we were seeing that majority of the auto counters were slightly on the back foot. Auto numbers and the pressure from the US markets. So this scenario indicates, possibility of further cut in auto counters also. Yes, so we have almost, engulfed 50% of the last week's gain, and we may see further dip or some consolidation in the auto counters. So for time being, be selective in this space. Hero Motoko is something that it's been holding strong, but still we are not seeing upside tick. And then we have TVS also, which is maintaining the positive tone. But the rest of the names, they are yeah, Tata Motors in fact also is among the top performing names. But after this dip, it might also consolidate. So largely the auto basket also likely to trade uh, or witness some consolidation after the recent surge. Okay. Defense sector, Mr. Rajesh, we have already discussed. So you can just check, uh, post this webinar. You can go to our YouTube channel, Religare Online YouTube channel, and you can just relook this section. So with this, we have answered all the queries except few queries which were stock specific. So thank you everyone for joining in. And yeah, by the way, we are tweaking this format also marginally. Uh, Based on the feedbacks we have added from the next webinar, we will share, summaries about what we are discussing in Hindi also, uh, so that the other audience, they can also join and you know take advantage of this webinar, and we'll add few more features also in the coming weeks. So 9th, next week, same time, same place, we'll connect again. Thank you, everyone.